Welcome back to Starting from Scratch, my 8 episode journey created especially for complete novice investors. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals, and I'm excited to guide you through today's episode. We'll begin with Alyssa's story, a journey that may feel familiar to you, and by the end, you'll have a vocabulary list, review questions, and a homework assignment to reinforce what you've learned. Let's dive in. Alyssa sat at her computer looking at the financial news and current stock prices. How do I actually make money from this? She wondered. She knew she received quarterly dividends for her Coca-Cola stock, but she always reinvested them to buy more shares. Her share count was increasing, and so were her dividend payments, but she wasn't sure how it all worked. Could she take the dividends in cash and use the money for something else? And what were capital gains again? One of her friends had been trading options and was really excited about it, but her grandmother was horrified. You might as well just go to the casino and lose your money there, she said. But was that always true? She had read that there were safer ways to use options that were not gambling. Alyssa felt overwhelmed by the different terms and possibilities and all the different advice that she was receiving. Determined to grasp the basics, Alyssa scheduled some daily time to read, watch videos, and take notes about capital gains, dividends, and even stock options. She wasn't sure who she should trust, but she found some good resources and the information started to come together for her and to make sense. Okay, so there's more than one way to earn money from stocks. I can sell them for a profit, collect dividends, or even use options once I'm more experienced. I'm starting to get it. Since share prices fluctuate with the market, you, like Alyssa, might be wondering exactly how you can make money with stocks. To answer that question, let's first look at factors that affect share prices. Then we'll talk about 3 ways you can make money in the stock market. Many factors determine share prices. When a private company becomes a publicly traded corporation, there is an initial public offering, or IPO, with a specific share price. After that, supply and demand determine the price of the stock as people and institutions buy and sell shares to and from each other. If the company is doing well, people are willing to pay more, and the price of each share goes up. If there's bad news, like a lawsuit or better technology comes along that erodes their market, stock owners may sell, accepting lower and lower offers for their shares, and the price will go down. Compare these charts of Apple and United Airlines. Why do you think the price of United Airlines went down so much between 2001 and 2002? The answer is the events of September 11th, 2001 caused all airline stocks to lose a lot of value. No one can consistently and accurately predict the market, but there are several ways you can make money with stocks. You can buy shares and later sell them for more than you paid for them, creating capital gains. You can buy stock in a company that pays a dividend. More about that in a moment. You can sell options on stocks for income, sometimes without ever actually owning the shares. But even the safe, beginner-friendly option strategies I teach are best learned after gaining some stock market investing experience. As I mentioned above, capital gains are one way to make money on stocks. There are a few things I want you to know about them. Let's look briefly at long-term versus short-term gains, as well as capital losses. Capital gains are earned when you sell an investment for more than you paid for it. In contrast, capital losses come from selling for less than you have invested in an asset. You can make capital gains and losses on businesses, real estate, and, as we're talking about here, stocks. Remember, your gains and losses are unrealized until you sell your investment. Until you sell, you have neither made nor lost money. You lock in a gain or a loss when you sell. Selling stock can trigger a taxable event that must be reported to the IRS when you file your taxes. Capital gains and losses are considered short-term or long-term and come with different tax implications. If you sell your stock for a profit after holding it less than a year, you earn short-term capital gains. Gains from assets you've held for longer than a year are long-term capital gains. In general, you will pay a higher tax rate on short-term capital gains than you will on long-term capital gains. For tax purposes, short-term capital losses can offset short-term gains, and long-term losses can offset long-term gains. I want you to be aware of these concepts, but I can't address your individual tax situation. If you have questions about your specific situation, you should check out the IRS website or consult a tax professional. Now, let's talk about another way to make money with stocks: collecting dividends. Not all companies pay a dividend, but the ones that do pay shareholders a periodic portion of their profits for each share owned by the shareholder. You may be wondering why some companies pay dividends and others do not. Companies do different things with their profits. Some use profits to grow the business, open another store, create new products, build a factory, invest in research and development, or pay down debt to strengthen the company financially. And some companies share their profits with their shareholders by paying dividends. Dividends are cash payments and are often paid quarterly or about every 3 months. If you own a dividend stock, you can take your dividends in cash, but many investors use a DRIP or Dividend Reinvestment plan to set their dividends to automatically reinvest in the company that issues them. The dividend income earned is used to purchase more shares of the same stock. If you reinvest dividends, you can supercharge your long-term returns because of the power of compounding. Your dividends buy more shares, which increases your next dividend, which lets you buy even more shares, and so on. The price of the shares you already own may be increasing during this time as well, so you grow the value of your investment two ways: through unrealized capital gains and through the DRIP purchases of new shares. There is a very interesting group of dividend-paying stocks that I want you to know about. The Dividend Aristocrats are S&P 500 companies with long-term, reliably increasing dividend payments. A Dividend Aristocrat stock must have increased their dividend payouts for a minimum of 25 consecutive years, must currently be part of the S&P 500 index, and must have a minimum market capitalization or total share value of at least $3 billion. I personally like this group of companies because they did not decrease or stop paying a dividend after 9/11, during the 2008-2009 recession, or during the early days of the COVID pandemic. Even though their share prices fluctuate, I know I can count on them for steady income. If one of these Dividend Aristocrat companies reduces their dividend or is dropped from the S&P 500 index, they will automatically be dropped from the Dividend Aristocrat list. Now that we've covered capital gains and dividends, I want to talk briefly about one more strategy for making money with stocks: selling stock options to boost your earnings. By now, you probably don't need a reminder that I'm an educator by profession. I like to be sure my students are ready before I introduce new concepts. So I want to be upfront with you that if you are a novice investor, I do not recommend that you trade options with real money. But if you have some experience and can already confidently buy and sell shares of stock, I hope you'll consider learning some safe, beginner-friendly options trading strategies. Although some people who trade options gamble away their money seeking unreasonable returns, used carefully, options can be a useful addition to your investing toolkit. I don't teach any high-risk or complicated trades. In my book and Udemy courses, I show you how selling options can generate cash, help you buy stock at a discount, and even reduce your risks. I have created a checklist, which you can access at my website, to help you determine if you are ready to start using options to boost your portfolio. If you're new to investing, I recommend you get very comfortable choosing, buying, and selling stocks and ETFs before you touch options. I also recommend you practice with a paper trading account while you're learning. Let's review key terminology from this episode: supply and demand, capital gains, capital losses, dividends, DRIP, Dividend Aristocrats, stock options, and IPO. Now look over these review questions and see if you can answer them. What is the main factor that affects the price of a stock after its IPO? What are capital gains and when are they realized? Explain the difference between long-term and short-term capital gains. What are dividends and how can investors use them to grow their investments? What is a DRIP and how does it benefit investors in the long run? Who are the dividend aristocrats and why are they important for income investors? Why does the video suggest waiting until you have stock investing experience before trading options? How can stock options be used to generate income, and what should novice investors be cautious of when using them? And finally, your homework assignment. Visit a financial website such as Yahoo Finance or Bloomberg and look up a company that pays dividends. In the comment section of the video, share the name of the company, the current dividend yield, whether the company is a dividend aristocrat, and why you would or would not consider investing in this company for dividend income. Next up, in episode 6, we'll discuss diversification. It's never a good idea to put all your eggs in one basket, so I'll show you some ways you can achieve a balanced portfolio, even if you have a small account. Don't forget to like this video if you found it helpful, subscribe to my channel for more tips on investing, and check out the links in the description to access additional resources.